Hi, I'm Michael Newrock and welcome to the Trendcatcher Trading Strategy video. In this video, we're going to cover a whole heap of information on trends in general and the Trendcatcher strategy in particular. And over the next few sessions, we'll be covering how to detect market reversals, how to identify support and resistance, institutional levels, and a whole heap of tips and techniques on how to trade the Forex markets successfully. If you do get anything out of it, then please leave a comment below. You could win yourself a 24-month premium membership. And of course, make sure that you download the free special report on each of these strategies, starting with the trend catcher strategy that we're covering today. Okay, so first of all, let's go over what we're covering today. I'm going to go over a bit of an introduction on trends. We're then going to go over the system components of the trend catcher strategy. We'll then cover buy rules and buy steps, so you know exactly how to take a buy using the trend catcher strategy. And then, of course, we'll cover sell rules and sell steps, so you will know how to take a sell trade using the trend catcher strategy. And finally, we'll go over some information on trends and trends within trends, which a lot of people aren't actually aware of. After that, we'll then go to the live charts and see what we can find, see what we can see, if we can identify any trades that are happening right now live. And we'll go over a whole bunch of examples as well. So by the end of this video, you should definitely be in a much better position to be able to identify and catch trends on a consistently successful basis. Okay, so first of all, let's cover trends. Price always moves with the trend, and you may have heard the trend is your friend. Of course, until the end is the last part of that sentence that traders don't generally talk about. And we're going to cover that as well, how to identify contrary moves against your trend and when's a good time to get out of the trend. But essentially, price always moves with the trend, and that's why they are so powerful. So first of all, we're going to look at how to identify potential changes in the trend, how to take advantage of high probability entry points, and then how to minimize your risk with optimal stop loss levels. And we'll also cover targeting, how to not leave money on the table or pips on the table, how to be able to get the most out of a trend once you've successfully caught it. But first, let's cover system components. So the trend catcher system is a very easy system to use, and it uses two very popular components, moving averages and MACD. First of all, let's cover the moving averages. Now, here you can see a buy trade. Now, we have two moving averages displayed on the chart, and you'll see some live examples of those in just a minute. We have a fast moving average and a slow moving average. The point when the fast moving average crosses the slow moving average is called the moving average crossover. Okay, and the same goes with sell trades. We have the fast moving average being the gold moving average in this case, and the slow moving average. And again, when we see the fast moving average cross over the slow moving average, we have what's known as the moving average crossover. And it's these crossovers that are good signs to identify as to when the market is about to start a new trend. Next up, we have the MACD, or Moving Average Convergence Divergence Oscillator. And that's a bit of a mouthful, and that's why we call it MACD for short. Now, going over it, actually, we'll just bring up the next bit. And when the histogram is moving up, it will turn green, okay, whether it's above or below this invisible line. Okay, so when it turns green, or when the histogram is moving up, it will turn green. That indicates that the price is moving up. When the histogram is moving down, it will turn red, okay, regardless of whether it's on the top or on the bottom. When the histogram is moving down, it will turn red, and that gives us an indication that the price is moving down. So here we have a little bit more of a close-up. Okay, again, we have our histogram, these vertical bars. Along here, we have what's called the zero line, and that's this invisible line that separates the top and the bottom. And we have this signal line. Now, it's not necessarily used in this system, but essentially what the histogram is moving or surpasses the signal line, it gives us an indication or confirmation that the price is moving with strength in that direction. Okay, so right here it had just moved up to the signal line, then we get quite a big move up here on the MACD, and you'll be able to see that on the charts as far as the price moving up. But we'll get to that in a moment. Okay, so essentially when the histogram bars are below the zero line, the price is considered to be under pressure and potentially falling. Now, MACD has been used for decades, and it's a very simple but very powerful indicator. So just to repeat, when it's below the zero line, the price is considered to be under pressure. Okay, and you'll typically see that the price is falling. When the histogram bars are above the zero line, the price is considered to be supported and potentially rising. And again, you'll be able to see that on the charts. Green histogram bars below the zero line represent a move up, contrary to the price being under pressure, and can be used to detect counter up moves. Okay, so even if it's under pressure, when you see a green histogram bar, that's a first sign or first alert that the price could be moving contrary to the downward move, being under pressure. And red histogram bars above the zero line represent a move down, contrary to price being supported, and can be used to detect counter down moves. Okay, so if the price is moving up and you see a red histogram bar, again, that's a first alert that the price could be correcting and moving down. Okay, so we use the MACD to confirm the trend that's in place, whether price is being supported or whether it's under pressure. But we also use the MACD as a way to exit the trade, as a first alert that the price could be experiencing a move in the opposite direction to your trend. Okay, so let's go over the rules. First of all, buy rules. The fast moving average must have just crossed over the slow moving average and be above it. Entry price must be equal to or above the moving average crossover. So enter the trade at the close of the candle for confirmation after all conditions have been met. Now I've got a little asterisk there because you can actually take the trade on the open of the bar. Now we'll go over that in some live examples in a moment, but essentially it's a little bit more risky. In some cases you can get in on the trade a little bit earlier, have a smaller stop loss and experience a bigger potential gain. But in trading, close is king. So for confirmation, it's always good to wait for the close of the candle before entering a trade. The MACD must be above the zero line, and the stop loss is placed just a few pips below the slow moving average where the crossover occurred. And finally, the take profit is set to at least 1-to-1 risk reward ratio or to the trail price. And we're going to go over a couple of ways to extract the most pips as possible from a trend. You can go for hard targets, but you can also trail. There are a couple of techniques for doing that, and I'm going to go over them shortly. So let's just take a closer look. Here we've got an example. We've got moving average crossover. We've got entry price at the close of the bar. Now in this case, it would have been safe to take it at the open of the bar, but that's not necessarily the case. We have stop loss positioned just below the slow moving average at the crossover point. And then we have our take profit here, which I'm showing a 1-to-2 risk reward ratio. Sorry for the audio then, that's an alert going off. We'll take a look at the charts in a moment. So in this case, you would easily hit a 1-to-1 ratio and just as easily hit a 1 to 2 risk reward ratio. Now, the other way to do it, other than hard targets, actually you've got a 1 to 3 risk reward ratio here, is when the price comes back down and hits the slow moving average, that can indicate your exit out of the market. In this case, trade closed on the slow moving average trail for 120 pips, around 3.4 times the value of the stop. So it's really important when you see a trade to make sure that there's potential reward there. And what I mean by that is you've got to have a good risk reward ratio. Okay, so just going over it step by step. Number one, fast moving average. Okay, that's the gold one. Must have crossed over the slow moving average and be above it. Okay, number two, the entry price must be equal to or above the moving average crossover, which it is in this case. But as I said earlier, note here you can also choose to enter the candle on open without confirmation. It is a little bit riskier, but you do have the opportunity to make a few more pips. The MACD must be above the zero line. In this case, it clearly is, and it's beyond the signal line, which gives us further confirmation that it's a good trend to catch. The stop loss is placed a few pips below the slow moving average where the crossover occurred. And the take profit is set to at least 1 to 1. So over here you see 1 to 1, 1 to 2, 1 to 3, and of course the 1 to 3.4 on the trail. In this case, you would have been able to extract probably 1 to 4.5, somewhere around there. So a good trade. And you see these happen all the time. Okay, so let's cover the sell rules. In this case, the fast moving average must have just crossed over the slow moving average and be below it. Okay, so crossover is a crossover, but in a sell, the fast moving average must be below the slow moving average. Price must be equal to or below the moving average crossover. And again, enter the trade at the close of the candle for confirmation after all conditions have been met. Once again, you can take the trade on the open of the candle. It's a little bit more risky, but you can do so when there's momentum in the market. Number three, MACD must be below the zero line. Number four, the stop loss is placed a few pips above the slow moving average where the crossover occurred. And number five, take profit is set to at least 1 to 1 risk reward ratio or to the trail price, as with the buy trades. Okay, so just going through it, we have a moving average crossover occur here. Fast moving average has crossed over the slow moving average. Entry price is equal to or below the moving average crossover, which it is in this case. The stop loss is positioned just above the slow moving average at crossover. And once again, you can take your profit on a hard target on 1 to 1, 1 to 2, 1 to 3, whatever you choose. In this case, you can see here the take profit of 1 to 3 was 360 pips. But if you waited for confirmation for price to hit the slow moving average, as it did just over here, trade closed on the slow moving average trail for 295 pips, around 2.5 times the stop. Okay, so this strategy works on pretty much all time frames, and I say pretty much because I personally don't trade the 1 minute, and I rarely trade the 5 minute, although you can do it on the 5 minute as well. But certainly on the 15 minute, the 30 minute, the 1 hour, the 4 hour, and even the daily, it's a great strategy. It's very, very robust as far as symbols that you trade it on and the time frames that you use it on. Okay, so let's go over the sell steps in a little more detail. Once again, we've got a crossover of the fast moving average over the slow moving average, with the fast moving average sitting below, okay, the slow moving average. The entry price is equal to or below the moving average. Okay, and in this case, there's not a lot of difference between the open and the close. So you could have taken it on the open, particularly if you feel that that price is going to move down dramatically. In this case, it may have, because we got a nice big move here. But to wait for confirmation, which is always typically the safest way to do things in trading, close prices here, and the entry price is, in this case, definitely below the moving average crossover. Okay, MACD must be below the zero line. In this case, it was actually positioned here, and once again, it surpassed the signal line, giving us even more confidence in the trade. And number 4, stop loss is placed a few pips above the slow moving average where the crossover occurred. Okay, nice safe point. Of course, nothing is guaranteed in trading, but it gives you a nice safe stop to use regardless of the time frame. And take profit is set to at least 1-to-1 risk reward ratio. So you've got the moving average crossover here, the entry here, stop here, 1-to-1 risk reward, take profit here, 1-to-2, take profit here, 1-to-3 here. And of course, if we chose to trail the trade on the slow moving average to take our profit and close the trade, we would have generated 2.65 or 1 to 2.65 for our risk reward ratio. Okay, so let's quickly go over some details on trends. And of course, all of this is in the PDF and more. So make sure that you download the PDF at the end of this video and the live charts, the live examples and trades that we're going to go over. So the key factors in trading trends extremely successfully are determining a trend exists and what the real direction is. Okay. Entering the trend at the right moment that reduces risk and maximizes reward. You don't want to get in on a trend too late because, again, the trend is your friend until the end. I can't stress that enough. You want to get in right at the exact moment of when that crossover occurs. Keeping your trade in the trend for as long as possible. Now, a lot of traders will opt out of the trade, at a 1-to-1. They make their profits quickly and easily, but you kick yourself when the trade continues to go in the direction of the trend for another 200 or 300 pips or even 100 pips. It's a big trade. So this isn't so much, although it can be used as a scalping system. Trends, intrinsically are movements in the marketplace that can last a long time, and therefore I'm a big advocate for trailing trends, and we're going to cover that in a moment because you can extract a lot more pips out of the marketplace as long as you're locking in profits as you go. That's the key. And of course, you can also always re-enter the trend after the market price corrections and a new setup occurs. Validating the continuation of the trend is always really important, making sure that fast moving average is on the right side of the slow moving average, confirming the market based on the MACD. It's always important to be able to manage the trade throughout the trade cycle. It's not just about entering the trade at the right time, it's managing it and exiting it at the right time. And then correctly determining when the trend has ended. And we can do that via a number of ways, via the MACD showing a contrary histogram, via price coming down to the slow moving average, or via another trend catcher crossover, to the other side. It's definitely a time we should absolutely get out of the trade. Well, there's a couple of exemptions to that, but we'll cover that in the live examples. And finally, not trading in consolidation periods before new trends form. Okay, so when price is range bound in a very tight 50 pip or so range, that's not the time that you want to catch a trend because it could go up, it could go down, it could go up and down and up and down and up and down. So you want to be able to be more certain of when you catch trends. So in this system, all indicators will display upward characteristics when the trend is being supported and price is rising, and downward characteristics when the trend is under pressure and the price is falling. So let's have a quick look at trends. Now, the trend catcher system makes things so much easier to, identify. But looking at this, we've got a weekly trend here, and we've got this rally within the weekly trend. Okay, this is clearly an upward trend. Okay, now here we have a downward trend, and we have these downward falls within the weekly trend. So essentially, we have trends within trends. Now, there's multiple time frames when trading Forex, from the 1 minute, the 5 minute, 15 minute, 30 minute, the 1 hour, 4 hour, daily, the weekly, and the monthly. And the thing is, you can have trends within trends. In fact, that's a natural state of how trends work in the marketplace. So before we saw the weekly trend in the upward market, this here is that weekly trend. And the upward trend within the weekly trend is right here. Okay, so here we see that previous snapshot, the weekly trend, the trend within the trend. And here we get it, we've got a better look at it. But it goes deeper than that. Here we've got the weekly trend, the daily trend, okay? And then we've got the 4-hour trend within the daily trend. And then we've got a rally right here within the 4-hour trend. So essentially, we've got a 1-hour trend within a 4-hour trend, within a daily trend, within a weekly trend. And these are the trends that you really want to catch. Not necessarily that complex, but essentially you want to be able to be on the right side of the market at any one time. So if price is trending up on the weekly and the daily, then what you want to look out for, more probable than not, is upward trends on the shorter time frames, like the 4-hour, the 1 hour, the 30-minute, the 15-minute. You certainly can go for a downward trend when it's in an overall daily or weekly uptrend, but you've got a better chance of succeeding and extracting some positive pips out of the marketplace if you take your shorter term trends when they're in line, or when they're trends within trends of those overall trends. Okay, and then within this 1 hour, we've got a rally within the 1 hour. So it really is a case of a trend within a trend within a trend. Now remember, all of this information and more details are in the PDF special report, so make sure you download that at the end of this video. So when following the trend, or when trading trends, the goal is not just to enter the trade at an optimal time, but to profit from the trend for as long as possible. So rather than settling for conservative risk-reward ratios of 1-to-1 or even 1-to-2 as hard targets, we're going to use these as a guide to placing high probability targets, at which point we protect and profit by moving stops of our individual trades and locking in profits as we go. Okay, and you will find that if you were trading and you were happy, satisfied with 20 or 30 or 40 pips on those hard targets, I'm not knocking hard targets are great, but on a trend following system, particularly on those higher time frames, even a 1 hour time frame or even lower, does have the potential of making a lot more pips out of the marketplace than a 1-to-1 or 1-to-2 hard target. So here's a little bit of an example of how you can, profit from that. And of course, I keep on saying you need to lock in profits as you go. So let's say our first target is 25 pips. So when the trade is in profit by 25 pips, move stop loss 10 pips from the current price, and that locks in 15 pips. When the trade is in profit by 50 pips, move the stop loss 15 pips from the current price, locking in 35 pips. And when the trade is in profit by 75 pips, you can start trailing the trade with, in this case, the fast moving average as an example. And the reason why I state the fast moving average in that case is because, you can have more than one position on a trade. You can have 2 or 3 positions on a trade. So if that is the case, and you're taking 2 positions, then the second position would be similar. When the trade is in profit by 25 pips, you can move your stop loss 20 pips from the current price, locking in 5 pips. Okay. When the trade is in profit by 50 pips, you can move the stop loss 30 pips from the current price, locking in 20. And when the trade is in profit by 75 pips, you can start trailing the trade with the slow moving average. Okay, so one position, your first position, you're trading a little more aggressively to lock in as many pips as you can. And on the second position, you're trading it a little bit more liberally. So you're locking in profits, but not as much. Therefore, you've got a better chance of the trade staying in the trade and not getting knocked out. Okay, because that's the other side of the coin. When you trail a trade, um, if it's going to reverse on you, then that's a case of when hard targets are good. The good news is that you can trade either way as far as your take profits are concerned with the trend catcher strategy. So the two main trailing methodologies that I use with this strategy are simple and delayed trails and moving average trail. So the simple and delayed trails moves the stop loss without delay. Well, that's the simple, pip for pip. The delayed trail moves to definite lock-in profit levels at any time the trader chooses. And as I always say, it's wise to lock in profits just before key levels. So in upward moves, lock in profits lower than levels that may act as resistance. And in downward moves, lock in profits higher than levels that may act as support. We'll take a look at a couple of examples in a moment. And then, of course, the moving average trail, which is my favorite form of trailing, particularly with this system. And that uses a moving average line as the trail value. As the line moves closer to current price, the stop trails with it. Okay, you can use either the fast or slow moving average or both for trailing if you are, or if you do have two positions open or more. And when using this method for potentially maximum pips, use the slow moving average as your guide. So on buy trades, use the bottom moving average as your trail, and on sell trades, use the top moving average as your trail, regardless of whether it's well, actually, that's in the case of a slow moving average. Okay, so that concludes this part of the training. So let's take a look at the charts, look at a few live examples, and and go over and see what you can catch with the trend catcher trading system. Okay, here we are on XAU USD, that's gold. And we're going to go through about a dozen charts. I'm not going to cherry pick anything. I'm just going to, scroll through the charts, change a few time frames, and see what we can come up with. Now we're on the 4-hour time frame. This obviously looks like a fantastic trade right here. You could have caught it at around at confirmation close of candle at 1243 or just under 1244. Maximum of around 60 $60 move up to 1300 on gold, which is just short of 6,000 pips. Now there's a couple of ways you could have closed out. You could have closed out here when the MACD changed to red. That's indicating a possible change. But in this case, I don't think it would have been necessary because one, your histogram is still above the signal line, and two, it hasn't even come close to the fast moving average, let alone the slow moving average. Okay, the other time that you could have closed out would have been here when the price actually broke through the slow moving average and then closed just above the slow moving average. And of course, the final point where you could have closed your trade for a heap of pips would have been this contrary crossover here where the fast then dipped below the slow. So let's just go through a bit of a scroll and see what else we can find. Obviously, this one didn't succeed. This one broke even. Or if you're on a hard target or locked in profits, you would have made a few pips. This one's an interesting point here. All moving averages aren't made the same. In this case, it's quite a distance. You can see the price is quite a distance from this moving average. So I more than likely would not have taken that. And now we're in the middle of a consolidation period. Okay, so just looking back, okay, we've got a little one over here, a nice little one over here. Over here, we've got one, may or may not have been closed out. But the good thing is this one would have been, yeah, this one would have actually done quite well, especially locking in profits, as I would suggest. Okay, about $17 move on gold. Here we've got another nice one. And you can see the signals come up. Here's a beauty right over here. Okay, so it's about always being, always trading, um, always finding opportunities. Here's the crossover back here, about $100 in gold move, and this is where it just touched the slow moving average. Okay, now of course the strategy is equally good on all time frames. So on the daily, you can see a massive one over here. Now the thing about trading is that you're not going to win all the time. You're never going to win all the time. But if your winners are going to be significantly bigger than your losers, then you're going to be, in front. This is on the 1 hour time frame. You can see here, I'll just take it off the auto scroll. We've got a couple. This one stands out as a really nice one. Here we've got a really big one. So, okay, small loser here, or you might have been able to at least break it, move it to break even, which is always a good move. As soon as you're in profit, a decent way, that's what I always suggest. Move it to break even. If you get stopped out and then it continues to go the way you expected, then so be it. At least you haven't lost anything. But, you know, if it does move against you, you are not going to lose any money, and you're not going to stay in the trade hoping that it's going to go, back in your direction downward in this case, because obviously it, skyrocketed at that point. And the other thing is to use a little bit of common sense. Buy at low points, um, sell at high points. Don't necessarily sell down here because it's already the bottom of the chart. Don't necessarily buy up here. Okay, so let's go on to the 30-minute. Let's go to the 15-minute, and you can see these trades form all the time. These arrows that you're seeing are based on the indicator, the trend catcher indicator that you can get as a free bonus right now for joining as a premium member. And the good thing, as well as alerting you for trades, it actually is programmed to send push notifications to your mobile device. So if you are on the move, then you can get access to, to these signals, whenever they occur straight to your mobile device. So this is on a 15-minute time frame, and it's a great one because gold can be a fairly expensive symbol to trade per pip. And on this one, I would even go down to the 5-minute trades, and you can see right here, we're on May 18. What's broker time? It's the 18th of May, 2016. So you can see on all time frames, we've got some nice successful trades. Now we're on the euro. We're on the 1 hour here. This one here stands out. The euro's been a bit of a basket case lately now. So at the beginning or at the close, open or the close of the candle, either would have been good. For further confirmation, wait for the close of the candle. And in this case, we see a total move of 126 pips. You can see here, it never actually touched the slow moving average, came very, very, very close here. But, at this stage in the game, this is often a point of, a good place to see retracements and then resumptions of the trade. And you can see that over here where that retracement occurred with this move up and then a swing down. Okay, and we haven't really talked about swings in this video. We've really been focusing on the trend catcher system for catching trends at those crossover points, but you can use it on the basis of catching swings as well. So in this case, a swing right here. Okay, right here on that swing. And a swing simply means when you've seen a number of histograms or contrary histograms to the overall trend. So the trend is downward here. You're seeing upward moves on the histogram with them turning green, and then you see a red histogram. That always is a good sign for a swing, particularly when the histograms are close to the zero line, not necessarily when they're way beyond the zero line. So on the 4 hour, once again, we see a winner here, big winner here. Let's have a look. So about 330 pips, never came close to the slow moving average, except for the very beginning, once again. And here at your crossover, which is the most obvious point for getting out of the trade, 218 pips. Okay, now we're in the middle of a downward move. We've just had a swing down. This is better as far as you could have caught the swing, as well as this trend here. And I'll just scroll back a little bit. Once again, I haven't prepared anything here. We're just going live with. This is a consolidation period, and you don't want to, as I was sharing with you earlier, get into trades when you're seeing range bound trades where it's not going in one direction or another. Here you see another beautiful one that's that's moved up to the contrary crossover of about 175 pips. Again, this is on the 4 hour. You can expect bigger trades on the higher time frames, smaller trades on the smaller time frames. Here's another nice one over here, and so you can see. I hope that I'll just go back to auto scroll here. That there are trades galore. Signals are occurring all the time. Actually, I just spotted one over there. Let's see. If we scroll back, okay, that one wasn't actually a valid one, but we get a nice move up, and that's on the 30-minute time frame. So you can get, and this is for a lot of traders, they aren't used to this on a 30-minute time frame, getting a nice 60 pips or to cross over around 50 pips. Moving on to the 15-minute, I just want to speed through these so you can see that the opportunities are there, and that the trend catcher system does an excellent job of picking up these trends. Latest, so we're live right now, so we're 32 pips. This is on a 15-minute time frame. Okay, we've got a couple of nice moves up here. Got a nice trade over here. This is a nice one over here, and it was, or it reformed into another trade just over here. So to the crossover point, another 57 pips. And again, this is on a 15-minute, time frame. Now, the thing about shorter time frames, though, is that the shorter the time frame, the more erratic the markets can be. So you can catch some fantastic trades, but at the same time, you're going to get, or you're going to experience getting stopped out more as well. So the bigger the time frame, the more stable it is. Okay, so we'll just move that back. On the pound, okay, pound on the 4 hour. Again, we're live right now. It's saying that it's going up. It has turned against us. Now, if this turns green, we've got another swing upwards within the trend. So we could get a move upward. Here, just recently, we've seen a nice trend down to the crossover, 110 pips thereabouts. Here we've got a nice one. Oh, so, okay, so this one to the crossover, 148 pips there. Again, this is on the 4 hour time frame. And then retaking the trade again here to the crossover, 218 pips. Beautiful trade here, 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 here. Okay, so you can see, once again, this one's way too far. And particularly if you waited for confirmation, I mean, that is just a huge distance from 250 pips from this crossover point, which is the start or the inception of the trend. You really want to pick up these trends with trend catcher when the price isn't too far away from the crossover. Okay, beautiful upward trends here, downward trends here, and trend catcher picked them up. And once again, if we go to the 1 hour, let's put it on auto scroll here. So we've got a bit of a contrary here. We're seeing a 1 hour a trend. Previous to that, we saw a nice upward move. Okay, so moving on, and I'll just again rush through this because we are running a little long on time, or short on time because I've run long, however you want to put it. Beautiful move over here. So listen, um, if you had 2 or even 3 trades that were losers at 30 pips each, but you get one trade, that's 180 pips. Okay, so let's say you lost 3 trades at 30 pips, there's 90 pips, and then you hit one big winner at 180 pips, you're 90 pips up. Okay, so that's the way of looking at trading. You had a couple of losers over here, another big winner, down here. And we can go on and on with this. And I'll just go through a few more charts. 140 pips there. So you can afford to have a couple of losers. It's just the nature of trading. Aussie, good old Aussie. Right now, it's in downward move. So if we take a look at this, actually this is interesting. We're very much on a downward trend. Okay, so typically the way that I would be trading the Aussie, for example, is looking for downward trades in the shorter time frames. On the daily, we're definitely within a downward trend. Okay, so I should have gone over this on the earlier charts, but essentially, look at this one, 330 pips up, from its start. Now, obviously, the higher the time frame, the more you want to give the trade room to move for your stop. Okay, so you would have, placed it just above the arrow. Typically, is a good place. I mean, it's above the moving average, but you really need to give it a little bit of move or room to move, especially when it's so close to the crossover. Here we saw a nice big move up, but if we're looking on the shorter time frames, once again, you would be focused on these shorts, not on the longs. Okay, in other words, you're looking at selling every time you get a new setup of a trade, and even more so with the shorter time frames. This is on the 1 hour right now. We get a nice move here. This one failed, and then we get a nice one. We're right in the middle of a nice move here. Okay, 72.80. You could have got in it at around, say, start there, close the candle here. All right, 38 pips, and ongoing. Now your stop would have been, around here. So if it was around here, it was 20 pips. If you wanted to give it a little bit more room to move, 25, 30 pips, thereabouts. Okay, you don't want to stay in the trade for longer than that once price has gone up. You need to be careful of spikes against your position. But essentially you at the same time want to be able to give the market a little bit of a room to breathe. And as long as there's a good reward to your risk, then it's a trade worth getting, especially or taking, especially when you're in line with the greater overall trend. So just moving back to this one, for example, a little bit far from the crossover. I'm not too crazy about that. And we did see a retracement. But nevertheless, it still ended up being, a highly profitable trade on the 1 hour. And if we look at this one, okay, it needs to reset here. 15-minute, there you go. Once again, a really nice trade. You could have sold it back here if you're looking just for sells, because the overall trend on the Aussie is downward at the moment. Then you would have got in here to your crossover. Okay, there's only about 17 pips there, but it is on the 15-minute time frame. And then, you get back in here, and right now we're currently 45, 46 pips up and counting. Okay, Kiwi. Once again, we can see this is on the 4-hour time frame. We can see a nice big move just recently. Um, a break even or a loser here, break even or a loser here, undecided. But again, Kiwi, just like with the Aussie, I'm more bearish than bullish at the moment because, if you look at the weekly here, you can see that it is overall a downward trend. Okay, so back to the daily, the 4-hour, the 1-hour, and here we can see a cluster of sell trades. You've got a nice buy here, you've got a sell followed by a buy just here, and then you've got a cluster of sells. Okay, a little bit of a consolidation here, so we did get a buy there, but essentially the trade turned out to be a good and very positive trade, about 45 pips. Okay, again on the 1-hour, and right now it's looking like going down on the 1-hour trend trade. Okay, Aussie Kiwi, same thing. You can see trades happening all the time. Here's a nice 1-hour, just back over here. Okay, and once again, I'm not cherry picking any particular trades. I'm showing them to you live, exactly how they're appearing. Again, on the 4-hour, on the, what are we on? Dollar CAD, good old dollar CAD. Dollar, I'm typically and have been for a while bullish on, even though it's been going through quite a bit of a downward trend over the last couple of months this year. However, the overall position is upward. Okay, and this is on the monthly time frame. It's interesting to see that the price closed just on the slow moving average, and now it's bouncing off that. We'll see how it goes. It's not the end of the month yet, so anything can happen, but it looks like a possible reversal and a resumption of its overall upward trend. Here we can see a contrary indication with the MACD turning green and above the signal line, giving us a good indication of the possibility of an upward move. Here we can see, dollar CAD during that downward move earlier this year. What is that? 1,500 pips. About 1,400 pips to the crossover, or you could have been taken out here when it hit the slow moving average, or here or here. Now, in those cases, what I would do is get back and take a look at new trade setups on a shorter time frame. And right now, we're in a consolidation period of a new forming upward trend. It's not the most of confidence inspiring moves, because we're seeing this consolidation. But if we see a upward move on the histogram turning green, particularly if it's above the signal line, then we could get a nice move upward. So right now we can see on the 4-hour a nice profitable move there. Here we definitely would have made some pips. Here a bit of a break even, and here really again you've got the price just below the moving average, and I'm sure you can see in this particular case the crossover really wasn't clear at all. It's very in line with each other. So at the moment, if I was looking at the dollar CAD, I would probably be looking at upward upward trades, which it looks like it's doing at the moment. On the 1-hour, on the 30-minute, actually that's a nice one that's just occurred a couple of hours ago. And on the 15-minute, that's not the most positive of the type of trends that we look for on trend catcher, but this is certainly one more defined here, where again this one's not so much a crossover, but the moving average, fast moving average, certainly is above the slow moving average, but not necessarily the most cleanest of crossovers. Dollar Swiss, contrary to the euro, which it typically acts in the market as or it has typically a reverse correlation to the euro. We're looking bullish on the dollar Swiss again. If you look on the overall, it has been a little murky, but being or having a, um, a reverse correlation or an inverse correlation with the euro. Certainly, the daily that just occurred recently is looking, quite positive as far as an ongoing upward move. On the 4 hour, we caught a couple of nice ones, including this one just recently. Okay, so to wrap it up, dollar yen, we can see here a couple of nice moves. Scrolling back again, this is on the 4 hour. If we go onto the 1 hour, a little bit of a mess. We've got a few moves there that didn't quite occur. But again, when you get a nice big one like this, it changes everything. To the crossover point, just under 200 pips, 195 pips thereabouts. It never actually came close over here, but never actually touched the slow moving average, and that's what we are looking for when we manage the trades. This one was a little bit far from the crossover, but yet it still turned out into a good trade. Moving into the 15-minute, we've got a nice move upward, a nice move downward. We'll just bring it back to current. And right now we're looking at an upward move. Although, we have had some contrary moves downward. If we get a swing up with this represented by this histogram turning green, then it could be all on again for the dollar yen. Euro yen, same thing applies. Okay, so here, just to take it as an example, from this point, if we had our stop just above the moving average around here, we're around 30 pips. Give the trade a little bit of room to move. About 95 pips to the crossover point. And pound yen, we'll make this the last one. We can see just scrolling back, we get some nice big moves on the pound yen. This one over here, 850 pips to the crossover point, little break even or maybe a small loss here, and then immediately reversing into a continuation of that downward move with another 530 pips. So you can see some of these pips are huge. This one, for example, wow. Again, we're on the 4 hour here, so if you're after more action, this one actually doesn't even fit in the screen. So what are we? 184.60, and the crossover point is around here, 166. Wow, that's like it's like 1200 pips, something like that. So if we just to close once again, you can look at these on any time frame, daily, 4 hourly, 1 hour. Oh, there you go. Trend catcher pound yen on the 30-minute. Okay, so you can see that these trades come up all the time, and with the trade alerts, it makes it a lot easier to be able to identify them. And of course, with the mobile alerts, push notifications straight to your mobile device makes it even easier. So I'll close it there. That concludes our session for today. I'm sorry I went a little bit over. I look forward to seeing you again in the next session, where we'll go over how to detect reversals in the marketplace and how to be able to profit from them. And of course, please remember, if you want to go over more detailed information, then it's my price flip indicator giving me a reversal alert. Then feel free to download the free guide. Click the download your free trend catcher guide. Download the guide. If you want to join us, of course, click the copy our signals button. And as a premium member, you will get all of our indicators that we use for the generation of our signals for free as a bonus. It's the first time we've ever done this, and we're very, very excited. We've got a special promotion on at the moment to celebrate our 4th anniversary of published signals. And finally, please leave a comment below if you got anything, particularly if you got anything out of the video, or if you have any questions. I'm more than happy to answer them. And until next time, good trading, live well, and I'll see you soon.